Good morning. This is Barbara Kolm from Freedom Fest this time, and I have a special host tonight, guest here. This is Steve Forbes. Steve, thank you very much for taking the time and discussing with us not only your recent book on inflation, but a couple of other things on monetary policy that we've had the privilege being on the same panel already many times. This time, unfortunately, not. Steve, thank you for coming.
Barbara, good to be with you. And thank you for your fight for liberty in a continent that much needs it.
Oh, yes, you're totally right. Europe is a little bit doomed these days. We hope that last European elections will show a resurge of freedom-loving and free market people coming back to
At least it
politics.
tells the incumbents they don't know what they're doing.
Well, that is true. But you, apart from being the editor-in-chief of Forbes Media, but you also run the What's Ahead podcast, and you discuss many important issues, especially on monetary policy, with not only public intellectuals, but with business people, with important decision makers.
Like you.
Well, thank you. But I would like to go into gold and discuss with you what is the future of gold. We've seen many central banks buying gold in recent months and actually over years. We have seen developments. The BRICS countries thought they would come up with a gold-backed currency. What is the background of that? Do people not trust in the monetary system that we have at that time?
Well, as you know, economists disdain gold. They have many myths about the old gold standard. Under the gold standard, you never had inflation. And but the politicians don't like the constraints, and they feel that they can run the economy better than having a stable value for the currency. And so they disdain it. But even though they disdain it, and John Maynard Keynes called it a barbarous relic, it's very telling that central banks, as they disdain it, go out and buy it. And why do they buy it? Because it keeps its value. For a variety of reasons, gold keeps its intrinsic value better than anything else. Not perfect, better than anything else. So we've had 4,000 years of experience, and no one has found something any better. And so what Jim Grant calls the PhD standard, economists with PhDs have not done a very good job in running the world.
Well, unfortunately, we've seen that with the ECB, we've seen it with the Fed, we've seen the unconventional monetary policy of the past years, where literally all book wisdom and all wisdom of Austrian economics was dumped, and we went into this.
What they don't realize is that money is a measure of value. You use a scale to measure weight. You use a clock to measure time. And but when it comes to money, even though money is a measure of value, they feel they can manipulate and make things better by manipulating the value of a currency. And so it's like going to a market and you think you're buying a certain amount, and then no, they change it each day. If you don't have fixed weights and measures, you have a very turbulent life. The same is true of money. But so time has shown there are two ways to what a friend of mine calls the formula for a magic formula for growth. One is low tax rates, and the other is a stable currency. When you do that, other things fall into place. But so we have a lot of leaders and economists who might say need remedial education.
That is totally true. And if we look at what is happening right now in Europe, or as already also in the United States, they are experimenting with central bank digital currencies, which is the next step ahead, where we lose the trust in values that can.
Well, digital currencies are good if they're in the private sector, but with governments, it's the use of control.
Exactly.
They want to see what you're doing, manipulate you, take away your liberty, take away your ability to make your own decisions. So that has to be resisted. As the idea that central bankers can guide the economy, we should have learned from the Soviet Union, that does not work.
Well, and central planning in general doesn't work. As Hayek told us 80 years ago when the Road to Serfdom was published.
Well, they can't predict the future. They can't predict the creativity. And so, since their crystal balls don't work, they end up making a mess of things.
There is this issue of not full information. As
Well,
the
I
information probe.
talked about it. The marketplace provides an infinite amount of information on a real-time basis. You get right away what something is worth or what people want and what people don't want. There's no way you can replicate that in the center. You might decide at 10 a.m. in the morning you want to buy a new dress. At 11 a.m. you decide not to. The central planner can't anticipate those things.
Exactly. They have failed dramatically. Luckily, the Berlin Wall fell, the Iron Curtain fell more than 30 years ago, but we are still back to this old fallacies.
Well, bad ideas don't die easily. You know, in movies they always make these monster movies where the monster always comes back out of the swamp. So bad ideas always come out of the swamp.
Well, but the swamps also expand, unfortunately.
If you don't watch it, it will.
Well, and eventually our politicians obviously don't understand the true value of a sound monetary policy and of sound
Well,
money.
when you have a sound monetary policy, you don't need the politicians.
Well, and then we would not need central banks either.
So, well, then they could do something useful, like become Uber drivers.
Well, and the market determines their value and the price.
Remember, markets are people. So if you
Yeah.
don't convince people you're providing something they need, they're not going to give you resources in return.
Yeah.
So they want to go to compulsion. They know if they trust voluntary transactions, they're not going to do very well.
Well, you're totally right. So you just came from the book signing of your most recent book on inflation. So how it comes about and why it matters. Well, we know why we have inflation, but would you explain this to our audience?
Well, there are two
A little
kinds
bit
of
in
inflation
detail.
that confuse people, policymakers. One is what you might call non-monetary, which comes when prices rise because of a disruption of production. Like the lockdowns disrupted supply chains. They had no idea of how intricate these things were. And so it hurt production, so hurt supply, prices go up. Then you have the traditional kind, monetary, which always means reducing the value of the currency, usually by creating too much of it. And so we had a combination of both in recent years. And then this gets to the question of how you measure inflation. For example, in the United States, the big thing is the Consumer Price Index. But for some reason, they don't include the cost of borrowing. So your mortgage is not counted as a cost of living. The interest you pay on buying a car does not count. The interest you pay on a credit card doesn't count as a cost of living, which is an absurdity. So they can't even measure it right.
Yeah, that has been a huge issue in Europe as well. When Madame Lagarde came to office, she said, "Well, we would have to look into the models of how we measure inflation," and then she totally forgot because COVID came, and all of a sudden we had transitory inflation in Europe.
Yes.
To
Depends
fix
on
it.
how you define transitory.
Exactly. Well, it lasted for a very long time.
Yes, it did.
And not for just a month or two. But coming back to the main reason, the quantitative easing, the big expansion of the
Well, this was
monetary base.
unprecedented, and the manipulation of interest rates to levels never seen before in history. They had the theory that if you don't charge interest, that stimulates the economy. And it's like saying if you don't have rent, that stimulates house building. No, it does not.
Yeah.
It does the opposite. So we had years of stagnation. And then when and governments went heavily in debt. Why? Because money was free. A lot of companies went heavily in debt. And then when the rent came back, a lot of them found out, oops, we've got a problem.
This unconventional monetary policy does not work.
Never does.
We need to go back to conventional monetary policy.
Well, the true one, and that is have a stable value for the money.
Yes. Trust. And after all, I mean,
And
interest.
by the way, you want to know why there's social unrest. Inflation always undermines social trust.
Yes.
Countries with chronic inflation have more crime than those that don't.
Yeah. That is a basic understanding for everybody, but obviously some politicians don't. Maybe we should just tell them that interest is the price for money.
Interest is rent.
Yeah, it's
You
as
rent an
simple as that.
apartment. In this case, you're renting money.
Yeah, it's as simple as that.
Yes.
So, what alternative forms of, I mean, because I'm a big defender of cash and gold. Um, so, what alternative forms should we suggest to politicians they should look into
Well,
instead of
they don't want
CBDCs?
they don't want to hear it
Well, but
because it means less of a role for them. But it means a stable value for a currency, best achieved by a gold standard. Or if that's too much for them to swallow, they wouldn't even know how to run the system. Look at commodity indexes. That can tell you if you're creating too much money. So have the goal of stable money. Stop manipulating interest rates. Rent control does not work. And lower tax rates. And amazing things happen when we do that. Positive things.
countries grow, people get out of poverty, there is competition all over, all of a sudden possible. People become wealthy and prosperous. Those are the things that will happen.
A higher standard of living.
Yeah.
And usually those who proclaim themselves as defenders of the people are usually the biggest offenders when it comes to creating an environment where that can happen.
Yeah, they steal, exactly. They steal from people if they tax.
Well, yes, taxation is organized thievery.
Thank you for saying that. Um, what about silver?
Once upon a time, silver and gold were very closely related, usually 16 to 1. But the silver mining capabilities in the late 1800s improved dramatically, and also the rise of paper money. Didn't need coins as much anymore. So the old ratios went by the boards, but silver has been depressed for years. But in recent times, with the central banks doing their bad work, silver's come back a little bit. So last I looked, it was about $30. But gold should, especially gold, should be seen not as an investment but as an insurance policy.
Yes. We just had the 150th anniversary of Karl Menger's book, The Principles of Economics. And Karl Menger was actually in the committee when the Austrian-Hungarian monarchy changed from the silver standard to the gold standard. And he was warning, don't buy all the gold at one place because the price will go up. Take your time in the transition.
So there are sound ways to do it, but the key thing is the markets, i.e., people, know you're working for a stable currency. And the markets will anticipate good things. So they don't even have to happen yet. They know it will happen.
Well, that is true. So, one final question. How do you see the economy developing not only in the US, also in Europe? Europe, we have terrible problems right now. Germany is the sick man of Europe, right? It's the economic engine is suffering.
It's sad that in Europe, if you achieve 1 or 2% growth, they think that's great.
Yeah.
And the goal should be 4%.
Minimum. I mean, we have 0.3 this year, and that is nothing.
And all those wounds are self-inflicted. So when the politicians wonder what's going wrong, look in the mirror, not just for shaving.
Well, thank you for speaking up. One last question. What would you recommend to our young people, to the young audience who loves freedom, to understand the values of capitalism and a solid, sound monetary policy?
Well, they could read our book, Inflation, and they could also look at our series on achievement. People you've never heard of who created the modern world from the most unlikely backgrounds. which in a free society is allowed to happen.
Yes.
And George Gilbert's old book, Wealth and Poverty,
Exactly.
and other books. Hayek may be tough at the beginning, but so is reading Geoffrey Chaucer. You get used to it and you learn something from it.
Well, thank you very much, Steve, for taking the
you.
time and for educating us on gold and the importance thereof, and
Thank you.
trust and value.
Keep up the good fight.
Thank you very much.
Thank you.